Hey folks, David Frost, LazyGapTrader.com. In this video, we're talking about day trading, but more specifically, we're talking about gap trading. Gap trading is by far the single most consistent and profitable day trading strategy you can find across the markets today. What I do is teach a course, and within the course, I teach two specific gap trading strategies. The first one are the morning gap trades. We're going to take a look at a couple in this video. The second are gap fill trades. The morning gap trades are when stocks are gapping higher or lower at the open from the prior trading day's close. When they're gapping higher or lower by a certain amount, which is obviously discussed in the course, it creates a tradable opportunity. So as a result, in the course, I teach traders how to calculate exactly where these stocks should have a price reaction in the other direction. When stocks are gapping higher or lower at the open, they're going to be drawn to certain numbers. And at those numbers, they typically have a price reaction in the other direction. And that's what creates the tradable opportunity for those that understand how to calculate exactly where those numbers are. In addition to the course, I also provide traders that want to get them my gap trades each and every day, and they're sent out at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the market even opens for trading. This happens to be a copy of today's email, and there were 3 morning gap trades on the board. Lululemon, that was absolutely getting taken out behind the woodshed this morning. The second one was Cenovus Energy, CVE, and the third one was ConocoPhillips, COP. So 2 out of these 3 trades today hit their levels. Lululemon and CVE did hit their levels. ConocoPhillips didn't hit its level, and when stocks don't hit the specified level that I teach you how to calculate in the course, it becomes a no trade. We only want to take trades that hit our specific price level because that gives us the highest probability of success for a profitable trade. Let's review Lulu and CVE. Lulu, I say gap lower, support levels are $51.74, and I give 2 secondary levels. Stop and profit target is about 35 to 85 cents. This is a minimum profit target. And then I go on to say this stock will be extremely volatile this morning. Therefore, we have to give it a little bit wider than normal stop. So in these emails and also in the course, I teach how to come up with the price levels. I teach how much profit we're looking for and how much of a stop loss that we're willing to take so that we can manage our risk accordingly. The second stock, CVE, I say gap lower. Support levels are $11.54, and then I give a secondary level as well. Stop and profit target is about 15 to 25 cents. Now, these are scalp trades. We're not looking to marry these stocks. We're not looking to hold them for an extended period of time. These are day trades. These are scalp trades. We're looking to be in, and we're looking to get our profit and get out. Let's take a look at 2 of the charts from today's trades. Now here's Lululemon, and it doesn't look like much, but I want to explain exactly what happened. First of all, the stock closed yesterday above $66 a share. It was getting whacked down 20% this morning. That's a tremendous haircut. Now, how many people you know can identify a level, a price level, where a stock that's down 20% at the open will find support on a dime and reverse? This is what I teach in my course. Unfortunately for Lululemon, you can see here the low of the first minute of the day, and this is a 1-minute chart because I want to show the magnitude of what happened. The first minute of the day, the low was 51.75. The level given out this morning was 51.74. It missed by a penny and had a pretty good bounce, and just a couple of minutes later, the stock was at a high of 52.90. That's a tremendous bounce in just 4 or 5 minutes. But it didn't hit the level and came back in. But what did happen was it hit the 51.74 and bounced up again, making a high of 52.30. So not necessarily do you want sloppy seconds on some of these trades, and I teach this in my course, what to do with trades that come up short of a level by a penny and come back in. All that's explained, and it does happen from time to time. But the point that I want to make here is showing you the power of these price levels that I teach how to calculate in my course. Let's take a look at the other trade that hit its level, CVE. This stock also got hit pretty hard this morning, closing yesterday over $13 a share, opening this morning down about 10% and headed lower. What happened? It came right into the $11.54 area, pierced through by just a few pennies, and immediately reversed, making a high of $11.72 just 30 minutes later. It doesn't sound like much, but it's a low price stock, and we got the 15 cents that was given out in the email at 9 o'clock in the morning before the stock even opened for trading. You can learn how to do this each and every day. I teach everything you need to know in the course to trade the gaps successfully. I teach which stocks to play. I teach how to calculate the price levels. I teach how much profit we're looking for. I teach what type of risk we're willing to take on each and every trade. So as you can see, even though the stock has come back down to go below the 1154, the trade is over. We're long gone. We're on to another trade. Folks, if you want to learn how to give yourself a handful of scalp trades each and every day that are profitable scalp trades, come over to check out the course at lazygaptrader.com. I teach you everything you need to know to be successful with gap trading. I'm David Frost, lazygaptrader.com. Thanks for tuning in, traders.